Welcome to Investories, a podcast about real stories, real estate, and taking real action. Join hosts John Hooper and Kyle Robertson as they talk investing, mindset, and taking that first step. We all have a story. What's yours? The Investories Podcast.
Booyah! Welcome to the Investories Podcast with me, your host, John Hooper. Kyle isn't with me today. He's MIA. No, he had a prior engagement, so he couldn't attend this one. But hey, you've got me, and you've got a great interview today. We've got Alex Inabnet, and Alex is based in Austin. He works predominantly in Austin, Tampa, San Diego, and he is absolutely crushing it in what's called infill land development. So it's development, but kind of in inner cities or cool neighborhoods was the frame, I guess, we kind of connected on, both in San Diego, in Tampa, and in Austin. This interview is so good, even if you're just investing in buy and hold single family or multifamily, because Alex knows these markets. So he goes into detail of kind of performance in the market, what to look out for, trends that are coming up, trends in development, trends in building, refurbishment. So great for burst strategy. That kind of stuff. So it's a really great and kind of wide-ranging interview, and then a ton on mindset and training and kind of finding your why and getting started, that kind of stuff. So yeah, stick around for it. And if you really wouldn't mind, we'd love for you to go ahead and give us a 5-star review. We're working our butts off to bring you great content. So let us know. Do you like it? Do you like the format? Do you like what we're doing? And feel free to drop us an email. You can reach out to us at investoriespodcast@gmail.com. We're also on Instagram, investoriespod. So come say hi, and I'll get better at sharing content as well. Feel free to poke me and say, hey, where's the content at, John? And without further ado, thank you so much. And here's the episode. Welcome to Investories, Alex Inabnet. Did I say your name right, Alex?
You did, yeah. Perfect.
Almost like you coached me just before. Alex is a realtor and a general contractor, and we're going to get into all of that. Alex heads up Inabnet Realty Corporation, right, Alex?
That's correct, yes.
Tell us about the company.
So the company currently is a residential infill real estate development company. And so what that means is I target popular neighborhoods within San Diego, California, Austin, Texas, and Tampa, Florida, and basically find a distressed house or an older house that was built in call it the 1960s to 1940s to 1970s. And the goal is to buy the property, tear the old house down, get the approved plans and permits to build a new house, new townhomes. In San Diego, it's primary plus ADU and junior ADUs a lot of the times. But basically, we develop and build and hold luxury products in the residential development space.
Love it. That's a great pitch. I feel like you may have been asked that a few times before.
Once or twice.
Yeah. But how important is that, having that down, right? That's super important if you're pitching anything to be that tight.
Literally. I mean, the way that my business works is, I have the vision of what needs to happen, but I've got to formulate a team of designers, engineers to put the product together on construction plans and visually, and then also have to hire a great team of subcontractors to build the product. And if I don't have good teams on both sides, then the deal can go sour pretty fast. So it's the implementation of the vision that's in my head is key, and then also just hiring good people.
that translation piece, right? This is what I'm thinking now. How is it in the real world? I love that.
I get it out of here into real life. Yep.
The processing. I want to take it back a step, if I may. Your kind of intro into real estate. What were you doing before this, or what was your kind of early life?
So I've always been somewhat of a outside the box thinker, kind of creative individual. I'm from Louisiana, Shreveport, Louisiana, and I went to college at Louisiana State University, where I got my major was construction management. So I got a bachelor of science degree in construction management there. Had a few different internships with construction companies throughout college in Las Vegas, in Denver, and then in Baton Rouge, Louisiana, where I had like, I was a laborer, wearing steel toe boots, hard hat, uh, gloves, doing the actual day to day, sweating my butt off. And then also was a part of a project management team, um, that was building, more commercial products, um, as well. And so once I graduated college, I got a job, in Southern California. I started off in Newport Beach and was placed on a project in Carlsbad, California, which is North County, San Diego.
Yeah, represent.
Yeah. And the project there was a renovation of the shops at Carlsbad Mall.
Hmm.
So the project management team that I was placed with was tasked with hiring the subcontractors to renovate the upper and lower levels of the mall and then build out another portion of the mall. And then after that, I went to another project in Del Mar called One Paseo, and we built a 4 and 6 story office building on that project, which there were other contractors that managed subs to build apartment units and retail buildings. And then from there, I left that company and went to go work for a real estate developer in Chula Vista, which is South San Diego. I guess outside of the actual city of San Diego, but south, close to the Mexican border. And the developer I worked for had his own in-house general contracting company, and so I was his project manager, managing a 6 story apartment complex, ground up, um, a um, parking garage, and a VA outpatient clinic. So, I was from Louisiana, never really had lived in California, found myself in San Diego, the best city in the country. Um, really got to learn how from a more high level perspective on the commercial side, how the construction process works, how, from my standpoint as a general contractor, on a non self performing aspect, we basically hire all the subcontractors to do the work to build the product. So that means that the subs have to be, they have to know what they're doing. They have to, all work well together. So it becomes a group therapy session every day to make sure that these guys are actually building the product right and working well together. So from there, I moved from San Diego to Texas, where I got hooked up with a hard money lender that funded residential new development deals in Austin, Texas, and Tampa, Florida. So for a span about a year and a half, 2 years, I was tasked with traveling from Tampa to Austin, meeting with different residential developers that were basically trying to build their own speculative single family home or townhome projects. So it really gave me a good idea and perspective of how to underwrite these new development or infill single family and townhome new development deals, and really understand the language and what goes into all that. So my background, just to sum it all up, is basically in commercial construction management and then in hard money lending on the residential new construction side. So when you place both of those together, it kind of equals, creating my own real estate development business. And then, given the fact that I have a college degree in construction management and then 4 years of on-site experience, I'm able to get my general contractor's license, which I already have in Florida, and then I'm in the process of getting it in California.
You're straddling those two coasts, which
Yeah,
is kind of funny. So something that was really interesting is you said about a therapy session at the end of the day, right?
yeah,
I love that idea. What I find is, you look at a lot of people in who have gone through similar degree programs and similar educational tracks, including like internships as you. Um, they still would need that therapy session and that kind of W-2 dependency.
Yep.
What's the kind of driver or the reference to kind of push beyond that and start your own company?
Man, I just always I always actually struggled working as a W-2 employee, and I mean I still take a salary through my own companies now as a W-2, but as an owner. So, but as a strictly W-2, when you're just kind of starting out, you're just thrown out into the weeds of whatever it is that you're doing, especially in these random construction projects that I was in, and you just have to, you know, sink or swim and learn the process. In my case, I just knew from the start that I was just like, you know what, like all of these vice presidents and all these business owners, I'm spending 10 to 12 hours a day working on these projects for them. They may have a bunch of experience and whatnot, but I just was like, you know what, you know, all you have to do is just know what you're doing, and then you have to hire the right people to perform the work. And so once I kind of learned the process, which, there's still so much to learn. I'm not saying I know much by any means, but once you know the process and understand the big picture of like, okay, this is how it works. I just need to put this person here and this person here, then you're kind of able to separate yourself from the W-2 life. And then your time then frees up because somebody else is doing those tasks for you.
You're in that strategic space, right, where you're pushing strategy rather than the day-to-day buttons. But
Yeah,
for people, that's scary, right?
totally, dude. I mean, 100%. I mean, there's nothing's guaranteed. And so like each day is its own new challenge because, I'm the only one that has the vision that's in my head, and nobody else can understand that unless I explain it.
I
So,
like that. If
yeah,
not you, who else, right?
yeah, exactly.
That's the
100%.
great frame of it. Is there any kind of educational pieces or books that have kind of really helped you through that process?
Yeah, so I read a lot through just like audibles. And so one of my favorite books is called The Magic of Thinking Big by David Schwartz. Just harps on a lot of like, positive thinking, different strategic ways to get out of ruts, and really propel yourself forward. I'm a big fan of Grant Cardone and a lot of his books, 10X, Sell or Be Sold is a really good one that I've listened to a lot. Um, and then real estate wise, Real Estate Titans is one that really describes other real estate developers that have been successful through their careers and how they've done that. And it really harps on the mindset of those guys and gals that have been successful in the space because as the ringleader developer, like I was saying earlier to you, like you have to be able to project your vision outward to other people, and you have to have patience for that vision because when you're, especially in my current world um, uh, in the residential real estate development world and also construction, those projects, you know, you can look at a project for 3 to 6 months before you actually end up buying it, and then it's going to take 18 to 24 months to complete. So it's could be a 2.5 year process. So if you, work up to the commercial projects to doing mixed use and multifamily apartments from ground up, I mean, dude, those can last from the time you underwrite the deal and run the numbers to the time you purchase it. Those could last 4 to 6 years. So you really have to know what you're doing from the start of it and really push that vision and be patient
Mhm.
from the start. Otherwise, somebody else is going to convince you otherwise.
Yeah, and I guess you have to be convinced of the model, right?
Yeah.
In a 6 year cycle, it's
Yeah.
yeah, that's
Well, that's
kind of a
why,
long time.
I mean, that's why I start on a lot of people start with like renovation projects where they like leave the structure and just renovate it inside and either sell or hold it. Because I come from the construction side of things, I've kind of just, I did um, one duplex renovation, but I've really kind of skipped the renovation world and gone straight into construction. It's just, I know a lot of people run away from that because it requires more money involved, more risk. You really have to know what you're doing. And so at the end of the day, my business strategy is to buy, build, and hold the asset
Mhm.
versus sell it. so that the investors that invest with me can actually own a portion of the asset at the end. If they want to be cashed out, they can. But for example, if I'm building a uh, you know call it a 3-unit, 3-story townhome in Point Loma, that each of those units are going to be pulling 10+ thousand dollars a month in rental values because it's a luxury product that was developed and built by my companies. You know, the investors don't have to do anything; they just collect the mailbox money.
Love that. Yeah, and that's who doesn't love free money, right?
Yeah, yeah,
Well, free's a loose term, right? And I
yeah.
love that. And for those, I was sort of skeptical of Grant Cardone, but the messaging in a lot of his books is really solid. 10X is a really good book. It's kind of like a slap in the face, like you're thinking too small. I really enjoy
Totally.
that message. Yeah, it kind of it's good to hear sometimes.
Yeah, no, he's actually from the same. So I'm from Louisiana, so is
Mhm.
he. So I kind of related a lot to his like upbringing and the way he talks. So it's funny.
No, that's awesome. You did say earlier that you teamed up. Did you team up, or you worked with, or for a private money lender?
Yeah, so I was a W-2 employee for that fund, and basically I was a outside salesman, traveling from Austin to Tampa, meeting with guys like me now that need money for their projects and financing for their projects. So I got to see from like a lender's perspective how those guys operate, what their needs are, and then I utilize my past construction experience to really be able to know how to talk the language, their payment process, their draw process throughout the construction phase, and all that type of stuff. So
Yeah, and I guess advisory to the company, right? That you're in terms of risk and kind of underwriting that risk, I
correct.
guess.
Yeah, yeah. So there was already a knowledge base of kind of the process that they were going through. Just my knowledge base was more just strictly a general contractor in the commercial side of things, dealing with 25 to $75 million construction budgets.
Mhm.
And then when I got with the lender, those construction budgets that I was dealing with were on a way smaller scale to, call it anywhere from 500,000 to, $2 million construction budgets.
So you're like, oh, this is easy.
Yeah, well, I mean, not, I mean, I was, it wasn't really like this is easy, but it was just like, you know what? I can do this. You
Yeah.
know, it's just understanding the process and the dollar values and how the financing works is key.
Yeah, and I deal with contracts a lot, and actually, this it's like a scale rather than like this. The same challenges or the same features are there on like pretty much everything. Obviously, the larger it gets, the kind of more risk there is as a number, but the fundamentals kind of remain the same.
Very
Um,
true.
in terms of, I wanted to switch to kind of what you do now. In terms of for people that don't know what infill development is, what is it?
Yeah, so I guess we can, I don't know who's going to be listening to this, but we'll start in Tampa, Florida. So in Tampa, the neighborhoods that I'm interested in are Beach Park, Sunset Park, and Davis Islands. So in those neighborhoods, what I do is I look for older houses that are zoned residentially, that you know are 50 to 70 years old. And so then I run the numbers, see what newer homes that are being built close by sell for. And then I submit an offer on the lot, go through due diligence, close on the lot, and then end up building, get approved plans and permits to build a new structure, and then hire my general contracting company to build that new house, which can take that whole process from the purchase of the land to till until the end of construction is anywhere from, call it 12 to 18 months, depending on how long the approval process takes from the city. So I basically replicate that same thing in Austin, Texas. In Austin, it's your Zilker, Barton Hills, Travis Heights area, um, and your Terrytown area and Crestview, which are just already established neighborhoods, popular neighborhoods where new luxury homes and townhome projects are being built. And I just hire my own general contracting company to build the product. In Texas, there is no general contractor's license requirement. So, John, you can literally create a general contracting business today in Texas and say that you're going to build a house. So it's like
Wow.
pretty wild. And so then the third market would be San Diego, and the areas of interest there are Point Loma, North Park, Ocean Beach, Pacific Beach, and then I buy the lot, go through the approval process to build, and then hire my general contracting business to uh, to build the product. So it's an already established neighborhoods. It's like basically the neighborhoods that you drive through all the time, so they're always
Mhm.
being seen, not like in the middle of nowhere where there's nothing developed yet. So that's what infill residential
Got it.
development is. Yeah.
Love that. No, that's really really useful. And North Park's a great neighborhood. That's kind of on my radar. That's where I'd like to own something of, 6 unit, high quality, kitschy, kind of retro vintage kind of
Yeah, that's the thing
vibe.
about North Park is it's very artsy. So you
Hmm.
get like a lot of units. You can build, a lot of units, a lot of ADUs on single lots. And I tell this to people a lot just to so that they understand the differences between the cities that I'm involved in. But Tampa, Florida is basically like a double A market, just as far as like the difficultiness of the development. Austin would be like a triple A, and then San Diego is a major league market. It's just it's way harder to get involved. It takes way longer to get approvals to build. But
Yeah.
the good thing about San Diego is that you get you know massive returns on the backside because the in values are so high.
Yeah. And the rents are pretty quick at going up around here. Or they go up fairly quick. In terms of those three markets, in terms of the changes in the last 12 months, so we've seen a lot of kind of changes in rates, things like that, but maybe more on the specifics of the market, and then probably the projections in the next 12 months. What are the kind of big changes that are coming up?
Well, I mean, as everybody knows, the interest rates were increased just to basically kind of stop the inflation. I think the government just forcefully did that just because there was just so much inflation growth in the whole country. But it's actually affected, being involved in multiple places. I kind of I'm able to see the differences of the impact of of what's happened in those regions. And so, for example, Tampa's kind of held pretty strong. It's dropped maybe 5 to 10%. But in the areas that I'm involved in, Sunset Park, Beach Park, and Davis Island, where I'm looking at deals, um, you know, the values have held strong, maybe dropped a little bit on the buy-in side, um, and on the exit side. In Austin, Austin, out of the three places that I'm looking at and involved in, has dropped the most. Um, I think over the last 2 to 3 years, Austin saw massive inflation increase. Just somebody's buying a lot at this price. The next year, it's like increased by 300 to 400,000, and then that just kept going for a handful of years.
Hmm.
So Austin's dropped about 30% on the backside. So, for example, the lots that I'm looking at in the Zilker, Barton Hills, Travis Heights, Terrytown areas, we're selling, in a range of like 1.4 to 1.6 million. And these are old homes. These are like
Hmm.
800 to 1200 square feet houses
Wow.
that would, that were built in the 60s. So they were just, why it was so expensive was because of where they're located in the city. It just was a like advantageous spot. So a year ago, they're in that price range of 1.4 to 1.6. Now they're being listed about a year later. They're being listed at like 1 million to 1.4 million.
Wow. Okay.
But the issue is that the backside values of the new construction homes has dropped so much, has dropped 35%, that those lots are really worth 750,000 to like 950,000. So what's happening in Austin is that I've got, you know, 10 offers out there at the $750,000-$800,000 range, but people are wanting 1.1 to 1.2 for these tear down lots. So it's just, that's why I think that, to answer your question on what's going to happen in the next, 12 months, I think, I don't like to play devil's advocate, and I'm a really positive person all the time.
Mhm.
I think that the market's going to continue to drop down a little bit longer, maybe like the next 4 to 6 months,
Yeah.
especially in Austin, to where we'll see a lot of those lots I'm referring to in the city go closer to 800 to 900, maybe even 700,000. So Austin's taking the biggest hit. It's like it's at a standstill right now. Like a lot of people are having difficulty buying lots in my role, or like with like what I do in the residential infill world, residential infill development world because of that. And so I've kind of diverted my attention to the Tampa and San Diego markets because of that. So, um, and then the third place, San Diego, has, I submitted an offer in Carlsbad last week. It was listed at, I think, 1.1. At the last second, they increased the offer price or the listing price to like 1.3. Um, and so, I had 2 hours to submit an offer. So I'm on the phone with the realtor. He's like, dude, we got to hurry up. And then I submitted a over asking price offer, and I still lost out. So it's like, what's happening is the San Diego market has seemed to remain strong, and
Mhm.
continue to move forward. Austin's taken a massive step back, and then Tampa's kind of taken a little step back. So overview picture of all three of those places has been like really interesting to see with the rising interest rates. But I still think it's going to, um like there's still going to be a drop in the next six months until we start.
That was, I mean,
Well,
I do a little bit of reading on it, and that was my take is we still have high prices in certain areas. We still have high interest rates. Something has to give. I obviously look from a residential perspective, and it's like, well, when homes no longer are affordable, the price has to either come down or the rate has to come down. So I guess
yeah.
everyone's waiting to see which one that is.
Right. But I mean, like, especially in those three cities, I mean, again, I'm being totally honest here. I don't actually know if this is true or not. I just hear everybody say this, but I hear everybody say all the time is like, there's a housing shortage, right?
Yeah.
And really all three of those markets, like you hear that all the time. Is that true? I have absolutely no idea, but I hear it all the time. And so if
Mhm.
that's the case, then, we have a housing shortage with people trying to buy and develop new homes. And, there's been a slowdown of that. So, maybe more people are renting. They're, getting into apartments versus like buying a house. And so it's been an interesting time.
I think that's the case, and then that will mean rents can kind of go gangbusters basically
I know,
to
literally.
absorb
So
people. Yeah.
that's what that's what I've heard as well, is that like now the if you own real estate and you're renting out your piece of real estate, you have a massive leg to stand on and be like, hey, I'm going to increase these rents. Downtown San Diego, downtown Austin, downtown Tampa,
Hmm.
everybody's increasing their stuff right now.
No, that's it's super interesting. We were talking about rates in terms of financing a project. Can you break down what a typical project would look like? How you manage the financing piece of it?
Yeah, so there's multiple ways of going about doing that. So you have your um, like your banks, which are your primary market. I couldn't think of the word. I'm like first. Anyways, primary market, which are the banks, which are around. A year ago they were around like the 4 to 5% range, interest rate range, and now things have escalated so much that banks are around the 6 to 8 and even 9% range, which makes the secondary markets like your hard money lenders, and your private money lenders in the 10 to 14 to even 15% range currently. So you go backwards, excuse me, a year ago, and like I was saying, banks were at 4 to 5%, and the hard money, private money world was at the 7 to 9% range. So it was a lot. People, all those lenders wanted to get a lot more loans done at that time. It was just like a lot hotter because the rate was so much lower. But how there's three different scenarios on how I underwrite a deal in order to project the financing structure of a project. So the first one is I refer to it as a combo loan. That is where the lender comes in, whether it's a bank or private money, and they fund a portion of the land acquisition. So if, say, for example, I find a lot in North Park that I like, and I want to submit an offer on it, and I get it. Well, the lender will, say it's like $1 million lot. The lender will cover up to, a certain percentage of that lot purchase price, and then they'll have a construction holdback loan that I can draw from once the project starts going vertical and I start building. The second scenario is a cash out option to where I buy the land 100% cash. So in this case, I spend $1 million buying the lot instead of around 600 to 700,000. So I'm more money out of pocket on this, but then after I get approved plans and permits and X amount of months to build the project, then I'm able to get cash back, to be able to use that cash within the project to build the project forward. The third option is a construction loan only, where it's similar to the cash out, to where I put down 100% on the land. So I would put down $1 million for that North Park deal, and then once I get approved plans and permits, then the lender comes in and I don't get any cash back. I just get a construction loan for the actual vertical construction. So that process that the timeline of that process varies. In Austin and Tampa, it can last anywhere from 12 to 24 months, depending on if you're doing a single family house or 4 to 8 unit townhome project, 2 to 4 unit or 2 to 8 unit townhome project. In San Diego, though, it's a longer process because the city takes longer to review the and approve the plans and permits. So the the combo loan option in San Diego is kind of thrown out because if I'm trying to get an 18-month loan in San Diego, for the dirt and construction, they're going to take 6 to 12 months on a fast track to get the approved plans and permits. And say it's 12 months, that means I only have 6 months left to build the project. And so, which is obviously, we all know that can't happen. And so ultimately, when I'm purchasing a lot in San Diego, I would have to come to the table with $1 million to purchase that North Park lot, and then hopefully just the city approves the plans and call it 8 months, and then from there, that's when I can go to a lender and say, hey, look, I have approved plans, I have approved permits. This is where the lot's at. This is what I paid for the lot. Can you give me a cash out loan so I can get money back so I can move the project forward and build it, or can you just give me a construction loan?
Amazing. Wow, that's a comprehensive answer. I really like that.
Yeah,
Thank you.
yeah.
Um, so I guess the next phase of that, and we're probably skipping a bunch of phases in terms of project planning and that kind of stuff and kind of design. Um, speaking of which, do you have like a cookie cutter series of designs, or is everything custom or bespoke? Or
Similarly to the general contracting world, how we don't self-perform anything, we hire out all the subcontractors to build the project for us. That's what we do on the design side as well as the developer. I don't currently have an in-house architect or in-house interior designer or in-house civil engineer or structural engineer or geotechnical company. We hire out all of that. So we hire an architect, we hire the whole design team. And so that's how we have to make sure that the team that we're hiring, um, is a good one, because if the architect doesn't put together good plans, they can't be built well by our construction or our general contracting business, then it's harder to get the project built. So what I'm trying to say is long-windedly is that each project we have, uh, a creative new architectural plan.
I like it. And Alex, that's the perfect segue into my next question, which was, how do you pick good, I guess, including architects and engineers and people like that, but how do you pick good contractors, and how does that process work? and how do you manage them from a distance?
So good. I mean, good question, dude. I mean, honestly, it's a lot of relationship based. I mean, I'm looking at the architect's experience. I'm looking at the projects that they've designed in the recent past. If I'm in the future trying to do a mixed use or apartment complex building, I'm not going to hire an architect that's only worked in the single family home space. Um, so I want to make sure the design that I'm projecting and trying to develop on the lot, that the architect has the experience in that in doing previous designs of that type or similar type. And then same thing for the subs. So uh, I make sure that the subs that I'm getting bids from have experience building the same type of structure that I'm trying to build. So it's an experience piece. It's a relationship piece. And I, especially on the design side, I love architects that know the code well. They go out there and hustle, that, can actually inform me of things that I didn't know. And then, honestly, whenever that's the case, even on the subcontractor side, I'm like, okay, I think I need to really consider hiring this person.
Yeah, I guess it's like, there's an exchange with an architect, right? That you want them to feed back and say, "Have you
Yeah.
thought about?" Not just, "Oh, let me draw that for you. Here you go."
Right. Well, the example is this is like, if I'm trying to build in Tampa, if I'm trying to build a 6,000 square foot house on a lot in one of those neighborhoods in like say the Beach Park area, and the city comes back and says, no, you can't do that. You can only do a 5,500 square foot house. If I'm not aware that the city's wrong, I'm just going to say, all right,
Hmm.
I'll build a smaller house. Well, if the architect, who should know the code better than I do, because I'm hiring them for that, responds back to the city, hey, if you reference development code XYZ, and presents that to the city, and convinces the city, hey, we can actually build a 6,000 square foot house here, um, then I know that I've hired the right person.
Hmm. No, I really like that. I think
Yeah.
that's sage-like advice, right? Have you
Yeah.
had kind of, in terms of then experience with contractors, have you had any kind of nightmares or challenges, or what does that look like?
Well, I mean, no, I mean, I think any nightmare is relative, because it just depends on how you take it. I mean, in the construction world, there's going to be massive, cost increases. There's going to be unforeseen conditions. There's going to be, change orders that come that you're like, oh my God, this is going to totally break our construction budget. But at the end of the day, you have to remain like at a higher level perspective of like, we're going to get through this.
Hmm.
This sucks, but let's use this as a learning experience in the future. And as far as like many bad experiences, I can't really say that there was many. It's just, a lot of comments that I personally get. I'm 29 years old, and a lot of these subs that I'm like writing the contracts for with the specific scopes, getting them to sign the contracts, date them, initial them so that we have an agreement to move forward, is that we'll get into the project, and they'll disagree with something that I'm saying, and they'll be like, man, I've been doing this for 35 years, dude. You're 20, I've been doing this longer than you've been alive. Like, you don't know anything. And so, I just kind of like, I'll shrug it off, laugh, be like, yeah, totally. Like, you know way more than I do. But we have this agreement that you signed, and you have to move forward with this.
Hmm.
So it's like, it's because I think, when people refer to contractors, especially in the renovation world, there's a lot of negative talk about them, because they're just, they're perceived as liars, and, guys that run away and don't do great work. And so I'm trying to flip the script
Hmm.
with the current perspective of contracting, because I think, you know, you can get affected if you let it affect you.
Hmm.
Um, but if you don't let it affect you, then you can just shrug it off, laugh about it, and be like, dude, this sucks right now, but we got to figure this out. So let's put our heads together, and so we can push our project forward.
We've only had positive experiences with contractors here in our limited work we've had done on a few different places.
That's good.
And it's kind of interesting, right? It's you should shop for value rather than price, I guess is my
Right.
takeaway, like a lot of things in life. So yeah, it's super interesting to don't order things by the cheapest, order it by the best value.
That's a good point. Yeah. So, I mean, that's a really good point because in my world, typically the guy that comes in at the lowest on the contracting side versus somebody that comes in the middle or highest price point, typically not all the time, but 5 to 6 times out of 10, the the guy that's in the middle will typically be the best option price wise
Mhm.
and experience wise.
It's like ordering wine in a restaurant.
Yeah.
Go for
Yeah.
the middle one. It's
Yeah. Pretty much. Totally.
Love that. No, that's awesome. I think what's interesting is kind of how you underwrite and how you're changing that with changing rates, and you said cost per square foot of development. What does that look like today? Is there kind of different math you're having to apply?
Yeah, so how do I explain this like the fastest way possible? So my current roles as the owners of these companies that I have are investor relations, so bringing in investor money, acquisitions. So I have to know how to underwrite the deal to be able to submit an offer and then to be able to pitch the investors on the return that they would get at the numbers that I'm projecting. Um, and then the numbers like vary from location to location. So, for example, like Tampa, you can build luxury products at $225 a square foot on the construction side. Um, in Austin, you can build a luxury product for $325 to $400 a square foot on the construction side. And then in San Diego, it's $400 to $450 a square foot. So as you get up to those different levels of markets, um, the construction values change, which affects the numbers and all that stuff. So, I mean, I have a spreadsheet that I throw everything in. I'm making sure that I'm reviewing the development codes. I make sure that I have good architects, good land attorneys, arborists, surveyors, um, geotech people that can do the soils test reports,
Hmm.
zoning consultants, all those types of people that are on the initial uh, purchase review side of, hey, they can call this out and say, hey, Alex, this is not a good deal. I know you ran the numbers on this, but there's the reason why this is not a good deal is X, Y, Z. And I'm like, all right, you've been doing this longer than I have. This is your expertise lane. I'm like, all right, I'm dropping this one. I'm moving. Or they may tell me the other way around. Dude,
Hmm.
this is a great deal. Let's move forward.
Yeah, best money you're ever going to spend, right? We're on a canyon, and we got a geological survey done. It was like $400, and the guy came out and did some tests, and he's like, "Oh, it's all good." I'm like, "Sweet, best $400." When
Yeah.
I'm asleep in my bed on the side of a canyon, I'm not going to just slide right in.
It's always a cover in your ass, that's for sure. Yeah.
No, I love that. I think that's that's really fair. In terms of the, I guess the investor side, how does that work? Do you mail out to people, or how do you work that side?
So my investor strategy is a 506c, which that term means I only take on accredited investors. And it typically, each project varies, but on the minimum investment, but the bare minimum investment, depending on the structure, is typically a $100,000 investment. And that can change depending on the project. There's a project in Tampa that I have under contract right now that's going to be $200,000 minimum investment. And so how that works is I underwrite the deal. The investor makes, or I factor in an 8% targeted annualized preferred return on the money that's given from the investors at an 18-month hold for a single family house. And then for them to make more on their investment money, I give 15 to 25% of the back end value of the structure once it's built. So those two percentages added together, I underwrite at a minimum 30% return in 18 months. And so how that works is, John, is say for example, for this Tampa deal, I need $900,000 from investors for the deal to work and go through. So how that and I'm underwriting the deal at an 8% preferred return and a 15% um, profit split on the end value, um, which equals the 30%. I create an address LLC for the purchase of whatever, say it's a 123 Main Street in Tampa. I create 123 Main Street LLC, and the investors who invest the 900,000, they own 15% of that LLC, and then I own the 85% as the majority owner, and that's created for the purchase of the lot. And so ultimately, you know, I've seen so many guys and gals run around in this residential real estate development space and just find a lot, build it, and sell it. And I've had, I don't even have enough fingers on my hand of guys and gals that have been older than me, that have white hair, that are 20, 10 years older than me, 30 years older than me, that have told me, it's like, man, Alex, I really wish I would have held on to more of my
Mhm.
products that I built whenever I was your age. And so I'm just like, man, I'm not going to be one of those people that's going to be older and be like, well, dang, I really wish I held on to more of these luxury products. And so ultimately, how I underwrite and structure the deal from the start is for the investors to be paid back through a back end refi, and then I pull out equity and cash from the deal, because I'm my development loan is not as leveraged as other people. So I try to target a 75% LTC or below, which means that I'm putting down 60 to 75% down on the lot purchase. More times than not, I may just buy the lot 100% cash. So what that does is that decreases the construction loan, and that decreases the lender loan,
Mhm.
so that whenever I finish the product, when I'm trying to pay them back with the refi, then that loan amount's lower.
Mhm.
And so then that gives me more equity into the actual deal after that development loan's paid off. And so in theory, there's enough equity in the deal to cash out a portion of the equity and pay back the investors with their original investment, with their preferred return, and then with the profit split of the end value of the product. If there is not enough equity gap or equity margin to get the full cash out to pay them back from to meet the 30% return in 18 months, then we'll pay out as much as we can.
Mhm.
And then what's ever left over of the initial investment that they gave, I roll that investment into the hold of the project. And so then over time, I get the luxury rents per month, and I pay them, after paying the mortgage, I pay them all the profits of those rents directly to the investors until they're fully paid off.
Wow.
And then when they're fully paid off, they still own a portion of the asset, and then they get mailbox money.
That's
So
awesome.
yeah, so it can work in both scenarios. Dude, I'm 29. I don't want to be 49 to be like, damn, I really wish that I held on to more of these things, because nobody in my family's doing this, and I want to be doing commercial projects. And so, in theory, hopefully 5 years from now, I have 3 to 5 uh, builds that, I bought, developed, built, and held on to, whether it's with investors or not, partnered up
Mhm.
on the end, to where they're in Austin, Tampa, and San Diego. And then if I need to sell any of them, I can, or I can just hold on to them, and then I can then scale up to the more commercial side of development after the success in the residential single family home townhome side. So there's more of a long term play here for sure.
That's so cool. I bet your investors are happy with all that's going on in the market to have that little bit of extra
Well,
headroom.
I haven't seen many people in my space offer that level of return with this, given the market
Mhm.
status. So, I mean, I send out monthly investor emails, and just make sure that I'm communicating with them religiously of what's going on, if we're ahead of schedule, if we're behind schedule, and all that stuff. I mean, on our construction side, we utilize a software, excuse me, that that tracks the construction schedule. It has all the estimates in there so that it can just spit out like a monthly report,
Mhm.
and it shows them where we're at in the construction process and all that stuff. So,
Yeah, transparency is always good as an investor, and
yes.
I invest in actually similar. You don't get any ownership, but I get a 30% over 2 year return through my retirement account in the UK.
Okay. Well, man, I mean, if you're
Yeah,
open to
we'll have to
invest,
have a conversation, certainly. Absolutely.
we'll talk on.
Absolutely. Yeah, no, that sounds really good. I want to be mindful of your time, Alex, and yeah, so I want to thank you. How can people get in touch with you?
So social media, Instagram is just Alex Inabnet. That's AlexInabnet. I'm also on LinkedIn. Just search my name, and also Facebook. My, love giving out my cell phone number. It's 318-780-6513. Call or text me. Happy to chat about any future investment opportunities, or if you're involved in the San Diego, Tampa, or Austin markets. Um, and yeah, feel free to reach out anytime.
Amazing. I feel like the time went so quickly, Alex. Thank you
Yeah,
so much.
absolutely, John. This was great. Thanks for listening to me ramble.
Not at all. We'll be back next week.
Cool.
Thank you for listening to the Investories podcast. We all have a story. What's yours? The Investories podcast.